Welcome back to the deep dive.
Good to be here.
So, last time we really got into Public Bank's 2024 performance. If you caught that on YouTube, we talked about their growth, the LPI Capital deal, and that, goodwill impairment.
Right, yeah. That definitely set the stage for what we're seeing now, didn't it?
Exactly. And today we're digging into the very latest, their first quarter 31 March 2025 results.pdf.
The freshest numbers.
Mm-hmm. Our mission really is to see how Public Bank did in Q1 this year. What do these first 3 months tell us about where they are now and where they might be heading, building on what we discussed last time?
Makes sense. A check-in on their trajectory.
So let's jump right in. Looking at this Q1 report, what stood out to you first?
Well, straight away, the higher-level figures show that growth trend continuing from last year. Operating revenue, for instance, is up significantly.
All right.
It went from about RM 6.65 billion in Q1 2024 to RM 7.31 billion this Q1.
Right. And the bottom line, profit.
Similar story there. The group's profit for the period increased too, from roughly RM 1.66 billion up to RM 1.79 billion.
Okay, so that year-on-year growth, it looks pretty robust then. The net profit for the bank shareholders specifically was up 5.6%. How significant is that in the bigger picture?
I'd say it's a pretty solid indicator, yeah. Shows sustained profitability. And if you look at what's driving it, net interest in Islamic banking income, they grew by 3.6%.
Standard stuff, mostly.
Kinda, yeah. But what's really caught my eye is the non-interest income. That surged by almost 19%, 18.9% to be exact.
Whoa, okay. 18.9% is a big jump. That suggests something more than just usual business.
Definitely. And the report does point towards the contribution from that newly acquired general insurance business.
Ah, right. LPI Capital. We said we wouldn't deep dive into LPI itself today, but clearly its integration is starting to make a real difference to Public Bank's overall income already.
Exactly. It looks like that diversification strategy is kicking in, that boost in non-interest income. It could be quite important for them, reducing reliance just on lending margins.
Makes sense. It'll be interesting to watch if that continues. Did the report mention anything else boosting that non-interest figure?
Yeah, it also mentioned higher income from investments and foreign exchange dealings. So a few things contributing there.
Okay. What about the other side of the coin, expenses and provisions? Any major moves?
Well, interestingly, the impairment allowance, the money set aside for potential bad loans, actually went down slightly by about RM 21.5 million.
Oh, that's usually a good sign, right? Suggests asset quality is holding up?
Generally, yes. It points towards stable or maybe even improving credit quality. However, operating expenses did creep up by about 5.1%.
And why was that?
The report mainly puts it down to higher personnel costs. So, staffing-related expenses, that's something to keep an eye on, obviously. You don't want expenses growing faster than revenue indefinitely.
True. So, summing up the year-on-year, strong growth, boosted quite a bit by that non-interest income, slight drag from higher operating costs, but lower loan provisions. Okay. Now, how does Q1 2025 look compared to the previous quarter, Q4 2024?
Okay. Here, the picture is slightly more nuanced. Pre-tax profit was actually up quite nicely compared to Q4 by 11.7%.
Higher than Q4, but I thought, wasn't the net profit down?
It was, yeah. That's the twist. Net profit attributable to the shareholders actually decreased by 3.0%, or about RM 54 million compared to Q4.
Okay, wait. Higher pre-tax profit, but lower net profit. How does that work?
Yeah, it seems a bit counterintuitive at first, but the report explains it was mainly because they reversed an overprovision of tax from Q4.
Ah, so like a one-off accounting thing from the previous quarter making Q4 look artificially high in terms of net profit.
Pretty much, yeah. So that doesn't look like a drop in the actual underlying business performance in Q1, more of an adjustment effect.
Got it. Anything else notable in the quarter-on-quarter comparison?
Well, there was a significant negative swing in other comprehensive income, or loss in this case. That bucket includes things like, unrealized gains or losses on certain investments. That big negative shift this quarter is something we'd probably want to understand better in future reports.
Okay, good flag. That makes sense on the profit side. Let's shift gears slightly to the balance sheet. Loans and deposits, what's happening there?
Both showing positive signs, moving up since the end of 2024. Gross loans, advances, and financing grew by 1.4% in just the quarter.
1.4% in 3 months. What does that look like annualized?
That works out to an annualized rate of about 5.6%. So pretty healthy growth. It's an increase of about RM 5.9 billion in total.
And where's that loan growth coming from? Any specific areas?
The report highlights mortgages, higher purchase, car loans mainly,
Yeah.
and also SME financing.
Okay, so fairly broad-based then, across different sectors. That sounds positive.
Yeah, suggests decent demand for credit. And on the other side, deposits from customers, they also grew, up by 0.9% since year-end,
Which annualized is?
about 3.5%. So loans are growing a bit faster than deposits right now, but both sides are expanding. Total deposits are sitting at around RM 437 billion.
Okay. Steady growth on both sides. Now, with loans expanding, the big question is always asset quality. You mentioned lower impairments, but what about the actual impaired loans ratio?
That's really the key indicator, isn't it?
Yeah.
And the news there is, well, quite good. It's remained remarkably stable
It's stable at what level?
at a very low 0.53%. That's just a tiny tick up from 0.52% at the end of December 2024.
And how does that compare to, say, the rest of the industry?
That's where it really stands out.
Yeah.
The report notes the industry average is much higher, around 1.42%.
Wow. Okay, so public banks' impaired loans are significantly lower than average.
Massively lower.
Right.
It really points to very prudent credit risk management and strong underwriting standards on their part. It's consistently been one of their core strengths.
Yeah, that's definitely a reassuring number for investors.
Okay, what about capital? How are they looking in terms of capital adequacy? It's still very strong. Their capital ratios are consistently well above the regulatory minimums. It's another fundamental strength for them.
And there were some changes to the capital rules at the start of the year, right? From Bank Nagara.
Yes, exactly. The report mentions the revised Capital Adequacy Framework, or CAF, kicked in on January 1st, 2025. It mainly affects how operational risk capital is calculated. They've moved to the standardized approach, and also rules around exposures to central counterparties.
And public bank is also considered a DSIB, a domestic systemically important bank. Does that add extra requirements?
It does, yes. As a DSIB, they have to hold extra capital buffers just because they're, so important to the Malaysian financial system.
So how do the actual ratios look with all that factored in?
Very healthy. The report gives the key ratios, Common Equity Tier 1, CET1, Tier 1, and the total capital ratio, both before and after deducting proposed dividends for Q1. They all show a comfortable margin above the required minimums, including the DSIB buffer and the standard capital conservation buffer.
That's good. Any word on their overseas operations, like in Hong Kong or Cambodia?
Yeah, the report gives a quick snapshot. Public Bank Hong Kong, Cambodian Public Bank Vietnam, their capital ratios look solid too, based on their local regulations.
Different rules applied there, I guess.
Right. They operate under different frameworks, so the specific requirements, like for capital buffers, might vary. For example, it mentions Hong Kong and Cambodia have specific buffer rules. And interestingly, Cambodian Public Bank apparently updated how it calculates its capital adequacy from January 1st this year, aligning more with the standard Basel framework used elsewhere.
Okay, so strong capital across the board, both domestically and internationally. What about their Islamic banking arm? How did that perform?
Also showing good momentum. Net income from the Islamic side increased from about RM 413 million to RM 448 million year on year for the quarter.
And profit?
Profit for the period was up too, from around RM 151 million to RM 169 million. And similar to the conventional side, gross financing in the Islamic segment is also growing.
So positive contributions from both conventional and Islamic operations. Good. Now looking forward, the report usually gives some kind of outlook or prospects section for the rest of the year. What's the general feeling there?
They seem cautiously optimistic, I'd say. They expect continued economic growth, both globally and in Malaysia, which is obviously good for banks.
But there are always risks, right?
Absolutely. They acknowledge the usual suspects. Trade tensions, geopolitical stuff, maybe weaker external demand, commodity price swings, standard economic headwinds, really.
And how do they plan to navigate that? What are their strategic priorities?
Well, they really emphasize sticking to their knitting, you could say,
Mm.
focus on sound governance, prudent risk management, which, as we saw with the impaired loan ratio, they seem to be doing well.
Makes sense. Play to their strengths.
Exactly. And maintain that strong capital base to support growth and, keep shareholders happy with returns.
Mm.
They also specifically mention looking for opportunities to expand the general insurance business further.
Bringing LPI back into focus again. So that acquisition is clearly central to their growth plans.
Seems that way, yes. It's positioned as a key strategic opportunity.
Anything else on the strategic front, beyond core banking and insurance?
Yeah, quite a bit of focus on tech and digital, strengthening IT infrastructure, enhancing digital channels for customers. It's pretty standard for banks these days, but they highlight it.
And things like ESG. Sustainability.
mentioned as well. Commitment to ESG initiatives, growing their green financing portfolio, and of course, cybersecurity ongoing efforts there, which is critically important.
Always is. Okay, one practical point before we wrap up dividends. Any word on a Q1 dividend?
The report is clear on that. It states that no dividend has been proposed for this first quarter ending March 31st, 2025.
Okay, good to know. No Q1 dividend declared yet. Finally, let's just quickly circle back to those impaired loans. The report breaks them down by geography and sector. Anything interesting in that detail?
Not really anything alarming, mostly confirmation. Geographically, almost all impaired loans are in Malaysia, which makes sense. That's their main market.
And by type of loan.
The biggest chunk is related to property purchases, both residential and non-residential. That's pretty typical for a bank with a large mortgage book. But comparing the breakdown to the end of 2024, the trends look pretty stable across the board. No sudden spikes in any particular sector.
And same for the Islamic financing portfolio.
Yes, the report indicates similar stable patterns there too. So the detailed breakdown really just reinforces that overall picture of, controlled and well-managed asset quality.
Right. It all seems to tie together quite consistently.
It does.
Okay, so let's try and pull this all together then. What are the main takeaways from this Q1 2025 deep dive for Public Bank?
I think the key things are continued growth momentum from last year, definitely seen in the year-on-year revenue and profit figures. Loan and deposit growth is solid. And critically, that asset quality remains a major strength. The impaired loan ratio is still impressively low.
Very low compared to peers.
Exactly. And their capital position is robust, giving them a strong foundation.
And that slight dip in net profit compared to Q4, we shouldn't read too much into that.
Based on the report, no. It really seems down to that one-off tax adjustment from the previous quarter. The underlying performance seems strong, and that big jump in non-interest income, largely thanks to the insurance business, is definitely a key development to keep watching.
Right. So for you, the listener, maybe you're trying to get a quick but solid handle on things. This first quarter report suggests Public Bank is, well, financially sound. They're maintaining growth, managing risks well, staying well capitalized, even with some economic clouds on the horizon.
Absolutely. It's a picture of stability and consistent strategy execution, I'd say.
Okay, so here's a final thought to leave you with. Given these pretty solid Q1 results and knowing their strategic focus, especially on integrating that insurance arm and boosting their digital side, what do you think will be the most critical factors for Public Bank's success through the rest of 2025? How will those internal plans mesh with whatever the economy and the regulators throw at them? Something to mull over.
Good question to ponder.
Indeed. That's all for this deep dive. Thanks for tuning in.